In general, we would love to do something here in Stockholm or in other CBDs of the largest cities in the Nordics, but it's really challenging. We are looking beyond the normal plate a little bit. For instance, we have done a retail park in northern Sweden. It's a dominant park in that area. So what we do, we look at the property. Does this property make sense in this location? Is that property needed? What is happening if a tenant will leave? Is there an opportunity to get it released? This is what we are looking at. We are not looking at a specific product. I mean, we have done this year all kind of products. We have done offices, logistic portfolios, retail portfolios. So we are not limited to the asset classes. We can also do a residential portfolio, what we have not yet done here in Sweden, for instance. But we look really at the specific project. Does this make sense? Also from our policy perspective and also from a risk perspective. And then we look: can we compete? What kind of pricing is attached to that risk? And yeah. For us, maybe it's important that we have a number of international investors on our list. It's important that we have international investors understanding the markets. It's also important that those investors have people on the ground. The best thing, of course, is if those people on the ground also invest equity, a little equity in the investment. So what we would like to have is investors understanding the real estate and not coming maybe just from cash flow perspective. That is something that used to be the case in 2008 and earlier, and I think we have learned the lessons, and this is what we would like to tick off this box: local knowledge. Yeah.
And are you working also with other local debt sources? I wonder whether or not there's any of the sort of non-bank lenders who are active here that you're working with, or?
In general, I think in the future it's very important to have financing partners. Whether this is an institution, another bank, or it's an insurance company, whatever, equity costs are getting higher and higher, and therefore you need to have partners to work with in order to do also larger transactions. I mean, the deals what we are normally doing are in the larger scales, and therefore we want to team up with locals, but also with internationals, insurance companies. The deal we have done in Norway, for instance, last week, that was arranged by us with a local insurance company. Yeah. So we try to work with the locals, also to learn sometimes from them how they do the business, but it's also important for us to have the opportunity to syndicate post-closing. And this is why we have also just recently established internally a new department, the debt capital markets team. They are overseeing our portfolio and helping us in finding partners that we can team up. The reason for that is we see much more larger transactions in the Nordics. When you take Blackstone buying the Obligo company, or other cross-border Nordic transactions, they're large. They need more funding sources, and when we have the capacity to underwrite larger deals and then to syndicate, that's clearly of a competitive advantages to other banks or institutions here in the market. You need to be cautious about the value over pricing of real estate. So when we probably talk about today of an LTV of 60, it was yesterday maybe 70 and could be tomorrow 80. So when it comes to that, we need to look at the value. Coming back to the LTVs, I think the level of LTV that we are seeing has not changed over the last 3-4 years, to be honest. We have never been asked to provide higher LTVs. Yeah. And if we not get asked, we don't consider it. Yeah, and I think we are at a level where we feel comfortable at the moment, 60-65%, even if the values may drop a little bit. I think we feel comfortable, and also the risk equivalent, the margin. I think it's also, at least what I think, it's still good priced here in the Nordics. When you compare this with Germany, for instance, where I think pricing is not risk equivalent. And that's why we are very happy here in the Nordic region. What was the other question?
If this is risk aversion,
Basel. Well, I think it's not only Basel regulations, it's all regulations you have to take into account. I was mentioned this earlier, that we have, let's say, taking all the additional costs which may come up in the future. Risk buffer is now the new cost coming towards the banks. And taking all this into account, we have established the debt capital markets team, looking at our portfolio and steering the portfolio. I think that's a consequence that we probably see also in larger transactions in the future, more banks than we have seen before, because just of the lack of capital.